If you want to see the market forecast first, go to slide 6. Howdy swings. The FedEx and Lennar announcements were not good for the market, and the market was down in the morning because of it. However, Waller's CNBC interview turned the market around, and the market ended up closing mixed. In the end, it was as expected that there were attempts to push the market lower, but it was not as expected that the market showed weak resilience and failed to close higher. Will the market get back on track and keep rallying? Let's take a look at Fullhapce daily swing market forecast and explore the possibilities. Let's review daily market index movements. Market indices were mixed. The VIX and SPX were both down. SPX 5,702.55, minus 0.19% down. Dow Jones 42,063.36, 0.09% up. Nasdaq 17,948.32, minus 0.36% down. Russell 2000, 2,255.5, 0.02% up. VIX Index 16.15, minus 1.10% down. Let's look into daily sector performance. Power producers and utilities are up. The travel, consumer staples, and defense/aerospace sectors also rose. The transportation, home builders, financials, and semiconductor sectors weakened. Let's take a look at some of the reasons why. Negative news from some companies put stocks under downward pressure. After Waller's reassuring remarks on CNBC, the major market indices recovered somewhat from their lows. International economic events did not have a significant impact on U.S. stock market trends. The Bank of Japan's outlook was considered more accommodative than expected. Here are the things to consider. Waller told CNBC that core inflation has been below the Fed's 2% target for the past 4 months, supporting the easing of monetary policy. The Bank of Japan decided to keep interest rates unchanged, but changed its outlook to a more cautious stance due to increased uncertainty. China will likely need to stimulate its economy more to meet its growth targets. Here we present the daily market forecast for swings. The weekly bullish potential is strong, and the uncertainty is low. On the other hand, the daily market's upside potential is a bit stronger, but investor hesitation on Friday may or may not lead to a market pullback. As a result, support and resistance were balanced at SPX 5,700, where the market closed. Investors seem to have put the rally on hold after weak earnings, hesitated a bit, and then gained confidence after Waller's interview. However, it was not clear how strong that confidence was due to the volatility on the Four Witches Day. Nonetheless, with the SPX 5650, the previous resistance level, having been breached, we believe investors will regain their confidence, barring any bad news over the weekend. Therefore, we believe that the market could close higher on Monday, the 23rd, and could potentially go as high as SPX 5750 without much resistance. If that happens, the market may subsequently undergo a few downward stress tests afterwards. Let's explore some additional insights. Some recent earnings reports from companies were not good, but overall, businesses in the U.S. are doing well. The economy is growing steadily, inflation is slowing down, and interest rates are being lowered. These factors should support the U.S. stock market, helping it to keep rising even with uncertainties around the upcoming elections. Let's look at the counterarguments. The opposing scenario suggests that market goes back to SPX 5650 or even lower. The rationale for this scenario is as follows. The Federal Reserve's interest rate cuts are expected to help the economy, but corporate earnings are mixed this week. A number of Fed officials will be speaking next week, and they may not sound as optimistic as recent Fed meetings have suggested. The Bank of Japan kept interest rates on hold, but may raise them later this year. Despite the Fed's rate cut, the People's Bank of China left its lending rate unchanged, disappointing investors. Tensions are rising in Israel and Lebanon. While the opposite scenario has merit, we believe it is unlikely to play out on Monday, as none of the above rationales are valid for the U.S. market in the near term. Traders sympathetic to the opposite scenario may want to remain mildly bullish, but if SPX 5650 is reached, they may view it as a slight dip buying opportunity. The conclusion is as follows. We believe that the weekly market is in an uptrend, while the daily market is hesitant with investors lacking bullish confidence in the market. We believe that if there is no bad news over the weekend, investors will regain confidence, and Monday the 23rd will likely close higher near SPX 5750. Traders who agree with our forecast may be wise to stay bullish and buy a little more, then add a little more protection as we approach SPX 5750. Also, traders may be wise to consider both our main forecast and opposition scenarios to manage risk effectively. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.